Zero DTE stands for 0 days to expiration, and it refers to options contracts that are set to expire on the same day that they're bought. Trading zero DTE options generally implies a short term trading strategy that's typically focused on capturing volatility on the underlying asset, where traders are aiming to collect the premium from the volatility rather than on the direction of that underlying asset. Now, it's premium that we're after, and volatility is certainly in play, and we take advantage of it. But we also take advantage of the probability of price direction. And that's an undeniable success factor in the strategies that we use. Now, the cool part about this strategy is that we get to trade it 5 days a week, and there are just a few index-based options that have the volatility and the liquidity that we need to make our strategy work. And those are options on the S&P 500 using the SPX index. That's the full-size contract. We also trade the XSP, which is the micro version of the SPX, and it's 1/10 the size. And we also trade options on the E-mini S&P futures. Now, you can think of them as small, medium, and large. And that would be the XSP, the E-mini futures, and the SPX, respectively. But that isn't the only difference between these assets. When I first started out with the zero DTE service, we concentrated almost exclusively on the E-mini S&P futures because it trades around the clock and has no pattern day trader rule. Now, those are two very big advantages. The SPX and the XSP are only available to most traders during market hours and are subject to the pattern day trader rule. The disadvantage of trading options on the E-mini S&P futures is that the commissions, well, they're pretty high compared to the SPX, about 5 to 6 times as high. And that can really wreck your day if you're using high probability strategies such as a market neutral iron condor or even a credit spread. But we don't do that. We trade out of the money butterflies with asymmetric returns, where our risks are very small and the potential profits are very large. The profits that we're after are 20 to 30 times bigger than what most zero DT traders are going after, with strategies based typically on credit spreads and iron condors. And so the commission really isn't that big of a deal for us. Anyways, getting aside from that, we like the E-mini S&P futures because some of the advantages it gives us. And we like the SPX for its liquidity and its size. It's about double the size of the E-mini S&P. And we like the XSP for its extremely small size and its granularity. For now, the XSP doesn't have the same kind of liquidity or volume as the SPX or the E-mini. But it's still very tradable and becoming more popular with institutional traders and fund managers. And as I said, we like it for its granularity and the flexibility it affords, allowing us to employ gamma hedging strategies. So the XSP has a very special place in our heads for risk management and some of those more advanced strategies. Now, we like the fact that the SPX and XSP are cash settled, meaning that there's no assignment risk. This makes riding them into expiration totally hassle-free. With the E-mini futures, on the other hand, there is assignment risk, but only after the expiration is passed. So our basic solution is to exit the trade before expiration. It's kind of a no-brainer. So you might ask then, why don't you trade options on the SPY at zero DTE? Now, we don't trade the SPY because it's an American-style option. And that means it can have early assignment and kick you out of the trade prior to that expiration date. The futures and the SPX and the XSP indexes are all European style, so there's no early assignment risk. Well, you might ask then, what about zero DT options on the NASDAQ index, the NDX? Now, let me tell you, I'd love to trade the NDX. It has great volatility, and it trades 5 days a week like the others. However, the liquidity, it's just not there. So getting in and out of a trade could be a big problem. Now let's hope that the institutions and fund managers take a liking to the NDX, and in the near future, and when they do, and liquidity gets pumped up, I guarantee you that we'll be all over it. So there you go, the assets that we trade during zero DTE. E-mini futures for its round-the-clock trading and no PDT rule. The SPX for its big size and its cash settled. And the XSP for its granularity, which allows for advanced strategies. So I hope this was informative to you, and we'll see you at the 0DTE. Take care.